So yeah, welcome to the stage. How are you?
I'm great. I mean, it's an exciting time.
I remember hearing you at one of the conferences in Dubai. I think it was Wow Summit or something. And
Hmm.
somebody asked you, about the future and the predictions about the crypto market. And you said that I'm not going to give up on Web3.
So, we had over $314 million in revenue with, close to $100 million EBITDA and sitting between the on and off balance sheet, somewhere between roughly, $4 billion worth of assets.
Why you are still so bullish on this when everything seems to be, going down the hill?
So the reality is that actually NFTs is growing and is actually creating a lot of mass adoption, but it doesn't receive the same hype. And to me, that's kind of healthy as well. I mean, Bitcoin has averaged over 100,000 pretty much for, basically this extended period for the year between the tariffs, between Trump coin, between, all the volatility of this current administration that is sort of, throwing all sorts of random things that are hard to control. Of course, wars around the world, right? Like, we're not living in very stable times by any stretch of the imagination. And yet, our industry has an over $3 trillion market cap and is growing.
Are there any particular regulations or are there any particular clarity from the governments that we are seeking as an NFT holder or as a Web3 gaming enthusiast?
We believe NFTs in this category basically are not securities. So that's a clarity we need, is when it comes to consumer protection, is that when you go and issue an NFT and you make a promise of something, like, hey, this NFT will be used in the game, and let's say the game never happens, well, then maybe you need to return the value that you collected. It's kind of like faulty goods.
If I'm an entrepreneur, I'm building something in Web3, specifically let's say to gaming or to NFT or to metaverse in a way, then what sort of checklist I should be following in order to get into Animoca brands?
If you have a cool idea in Web3 that sort of promotes digital property rights, helps grow the ecosystem, then, sort of, brings mass adoption, look us up for sure, right? Web3 is very much about basically building networks. And so this is where things are a little bit different. If you're a Web2 builder, you're quite product oriented, right? And that's important too. But in Web3, your product and the network effect of the product is tied together. So that's the reason why so many people look at sort of the size of the community.
Hello, hi everyone. I'm Sunil Sharma, your host, where we simplify everything in Web3 and crypto for you. Today we have a very special guest for you guys. He's a crypto OG. If you're in Web3 space, you definitely know about him. A super friendly person. He has been doing a lot of good work for startups, for entrepreneurs. So today we are having Yat Siu on our podcast. He is right now the co-founder and chairman for Animoca Brands. Animoca Brands particularly is a Web3 gaming company as well as it is a VC fund that invests in Web3 startups. And he is somebody who has been totally bullish about it, helping entrepreneurs and startups day in and day out. So yeah, welcome to the stage. How are you?
Thank you for having me. It's a great pleasure to be here. Thank you for the warm introduction. And yeah, I'm great. I mean, it's an exciting time. Actually, in some ways, it's always exciting in this industry. It's obviously volatile, but that actually, I think, makes it exciting. In fact, if things were stable and if things were always predictable, then it probably wouldn't be that much fun, right? So,
So good to see you in so high spirits. I remember hearing you at one of the conferences in Dubai. I think it was Wow Summit or something. And somebody asked you, about the future and the predictions about the crypto market, and you said that I'm not gonna give up on Web3. So that was the headline that we all took from there. But actually today, as we all know, that there are so many headlines about crypto ETFs and everything going on, regulatory informations. We see Web3 gaming or the NFTs or the metaverse being taking a step back, taking a back seat, right? And it is very important for somebody like you, to kind of share your vision, share your mission right now, that why you are still so bullish on this when everything seems to be, going down the hill.
well, I mean, so first of all, there are a lot of reasons for us to be bullish. We as a company, as a business, which I would say, very much representative of the token space and the Web3 space. Last year, we had record results, right? So, we had over $314 million in revenue with, close to $100 million EBITDA and sitting between the on and off balance sheet, somewhere between roughly, $4 billion worth of assets. Right. So, and we had fairly humble beginnings. So 5-6 years ago in comparison to where we are today. And frankly, we wouldn't have been able to do that if we didn't go into the whole Web3 blockchain space. And so things are good for us. And therefore, from an assumption standpoint, naturally we would be bullish, right? Like, if things were bad, maybe, we'd be like, oh, I know things can be volatile again, as I said earlier, but, as a business, we're doing reasonably well. So there's nothing to sort of feel bad about. I think one of the reasons why some people believe that, blockchain gaming and NFTs are down is because it doesn't have the same hype, but that doesn't mean fundamentally it's not there.
Yeah.
So for instance, when you look at on-chain traffic, right? Actually, it's mostly Web3 gaming. Web3 gaming has the highest on-chain activity, more than DeFi, right? More than other activities, for instance, right? And by the end of last year, there was almost 7 million daily active users on chain. That's actually the fastest growth. There was only about 1 million of them, literally, several years ago. And now we're at 7 million and it's growing, right? So that's kind of one indicator. The second thing is, people love to say how NFTs are dead, but actually NFTs still do half a billion dollars of sales a month, okay? And so that's not dead at all, right? The only difference is that it's distributed across multiple chains, right? So it used to be that Ethereum was 99% of all the NFT activity. So, $500 million of 99% is a lot, right? But if you distribute and fragment it out to different chains, whether this is, Avalanche or, even on Polygon, for instance, or even Bitcoin with the ordinals, right? Yes, Ethereum is the largest one, but actually it's distributed around. To me, that's a more healthier ecosystem. So when you look at it as a collective, and then of course, Ton has now very much accelerated as well in the NFT space with their sort of, basically stickers and so on, right? So the reality is that actually NFTs is growing and is actually creating a lot of mass adoption, but it doesn't receive the same hype. And to me, that's kind of healthy as well. Like, I remember back in the days, in the early days of the internet, we used to be very hyped about MP3s. And we used to say, oh, digital music, MP3, isn't that cool? And now, it's like we all listen to digital music. We don't distinguish between an MP3 or an AAC or a digital file. We just listen to digital music, and it's normal for all of us. We don't sort of categorize it in a special bucket. And I think that's kind of what's happening with NFTs as well. We'll be owning a sticker or we're owning skins in a game, and we're doing stuff, and there'll be trade on the back, but we won't think about, what is the technology per se. We'll just end up using it. Right. So when you look at those indicators, it's actually very, very healthy. Right. While everyone else is saying it's dead, it's doing $500 million of sales. So that's okay, right? And then of course the whole token economies themselves, the whole industry is frankly bigger than it's ever been. I mean, Bitcoin has averaged over 100,000 pretty much for, basically this extended period for the year, right? Which despite everything. I mean, a lot of people say, oh, it's been volatile. Yes, but between the tariffs, between Trump coin, between all the volatility of this current administration that is sort of throwing all sorts of random things that are hard to control, of course, wars around the world, right? Like, we're not living in very stable times by any stretch of the imagination, and yet our industry has an over $3 trillion market cap and is growing, and is so again, like, if you look at that, how can you not be bullish? Right? How can you not be optimistic? Because if you only pick a period of time and you say, oh, look, between this month and that month, sure. But if you take an extended view, I mean, don't forget, what was it like 2 years ago, even 3 years ago, right? So we should all be celebrating, frankly speaking. So anyway, we're quite happy where things are. Of course, things can always be better. And that's why we keep building and investing, because the future is only just going to get brighter. So that's certainly our viewpoint, and that's why we're so bullish about the sector. And when we said earlier about how Web3 will keep growing, I think we were correct. Web3 has grown. It's become more stable. It's become accepted by more and more governments, right? So that trajectory is happening. And just yesterday, we had the Circle IPO, which went fantastic. I mean, It was incredible. So again, you can see the cycle of things. It's evolving, it's maturing, it's becoming more institutional.
So coming to the of course, crypto regulations are the most debated and the heated topics when it comes to crypto. And last 3-4 months can be sort of called the golden crypto era in a way, because we are seeing so much happening in US, we are seeing so much of clarity coming from other countries as well. And again, as I said, you rightly said, that for some reason NFTs and metaverse is not being part of that hype that is being catching up, right? And I would like to know from your side that are there any particular regulations or are there any particular clarity from the governments that we are seeking as an NFT holder or as a Web3 gaming enthusiast? Is there any certain particular crypto regulations or justifications you're waiting for, which may
Well,
further, let's see,
I mean, I think the most bullish one is the fact that the SEC basically said that NFTs, that have royalties, are not actually a security. I mean, that's actually a really big deal, right? I mean, if you think about it, right, it's one thing to sort of say, hey, we don't want to regulate NFTs. It's quite another to say that we believe NFTs in this category basically are not securities. So that's a clarity we need, and I actually think that allows a lot more companies to start looking at, oh, okay, well, if that format is okay as an NFT, then I can do that, right? And we have to also distinguish that NFTs can still be securities if they do things that act like securities, right? For instance, potential sort of yield-bearing instruments, or potential sort of fractionalized representations, for fractionalized assets, for instance, right? So these could potentially still be securities, but other forms have been clarified, not just in forms of art or no utility, but actually things that could have utility that might even have a royalty when you trade them, but actually those wouldn't be considered, for instance, a security, right? So I think that's actually very positive. Most countries and sort of governments that we speak with generally do not wish to regulate NFTs, right? In fact, I would say the US before, in the past administration, was actually perhaps the most sort of aggressive one in terms of, generally they were just aggressive about anything related to tokens. They didn't care it was fungible, non-fungible. They just basically said, if it's a token, it's a security, right? So that regime has gone away and become much more clearer. But places like Hong Kong have always been, and Dubai and whatever, these places have always been fairly clear that they didn't really want to regulate NFTs as forms of securities. And I think the way we can think of NFTs and also utility tokens is that they probably fall more into the kind of Consumer Protection Act than they fall into a Securities Act, right? And some of them might even fall into a commodities type scenario, kind of like Bitcoin. So you've got different buckets that are basically sort of managed by different parties. But within gaming, for instance, or membership and that kind of stuff, that basically would not be sort of held, I think, between the sort of securities foundations that are around the world. So I actually think that's pretty clear at this point. Where we need a little bit of catch up is when it comes to consumer protection, is that when you go and issue an NFT and you make a promise of something like, hey, this NFT will be used in a game, and let's say the game never happens, well, then maybe you need to return the value that you collected. It's kind of like faulty goods. When you buy a car, it ought to drive. if the car doesn't drive, well, then I guess you need to refund the car, or you need to replace it at least, right? Some element of restitution. That's consumer protection. That's not a securities violation. That's consumer protection, right? And so I think we're going to find ourselves slowly moving there. But because of the financial nature of tokens, because the capital formation is so accelerated, often people confuse it simply because they look at it as a speculative item. And the fact that just the fact that you can speculate in it doesn't mean it is a security, right? I mean, for instance, Pokemon cards are not securities, right? Art is not securities, right? It's just that, you can trade them. Some people want to do so, but actually, you really use it for its utility, and the utility is the prime reason behind that. So to me, this is very positive because most organizations are going to be using NFTs and utility tokens. They're not going to issue security type tokens. Now, one of the sort of ecosystems that is generally underreported is, for instance, what's happening in TON, right? When you think about the quantity of stickers that are bought and sold actually on the TON ecosystem with the quantum of users, that's actually a lot, right? And they exist. Essentially, you could call them NFTs. They're basically tokenized assets, right? In terms of stickers. So that's already happening. And now, of course, we recently announced had some research and analysis on Kaya, right? And Kaya is something similar, with basically combining the networks of, basic sort of cacao and lime. And again, you can imagine similar type of ecosystems to develop. So you'll see how that sort of grows and forms. And the reason we're backing all these ecosystems is because we can see it happening. And for most of the users, they don't particularly care about how much it's worth per se. Like, I know in crypto, people care about sort of how much it's worth, but most of the world doesn't necessarily care how much it's worth. They do care that they can buy and own it, maybe they can trade it, maybe they can gift it, but and the fact that they have ownership is cool. But the fact that it exists as a sort of digital asset like an NFT and has sort of things that can form from it, that's very exciting. But the utility is the reason why they buy it first. The speculation is secondary. But because of the nature of the first generation of people in crypto, right? Speculation came first, utility came second, and so slowly that's changing, actually quite quickly. But so you have the argument between the two audiences because they're not the same, and therefore it feels like it's not hyped because within crypto people say, well, the prices aren't going up, so I'm not interested. But with the people who are coming from Web2, they're just using it. They don't really care.
Yeah, I mean, so I have always thought of NFTs as a way of, retaining your consumers, giving them more incentives transparently and, feasibly as possible. And their NFTs, we are seeing adoption as well. I mean, you see a lot of airlines right now, Qatar Airways and others, taking part with NFT loyalty points. Even I heard that other credit card companies are also coming to picture. They want to use one of NFTs as a loyalty kind of point-based system, right? But here comes the second part, where I see a lot of people to whom I'm discussing right now who want to launch NFTs. For example, recently I met with a film producer. Now he wants to basically launch NFTs around it. He wants people to go out and buy these NFTs and own a piece of his movie. Mm-hmm. And these movies mostly have perpetual revenue streams, right? Mm-hmm. So either through satellite TV rights or something like that, they will keep on making money, and he wants others to be part of it. But where I found him stuck was this whole debate around copyrights, whole debates around trademarks. That how do you basically manage the copyright issues as well as the regulatory point of view of an NFT when you release it? So if you can maybe throw some light on it, it will be really helpful for a lot of people from Web2 who want to tokenize something as an NFT.
So very let's start off first what blockchain really does, right? So blockchain sort of allows you to have a proof of something, and that is the verifiable proof of whether it's your identity, of your ownership, of your Bitcoin, whatever it is. It's the immutable proof that it is something that you have that says something. Okay, so then the next question is, what does it say? So in the case of an NFT that is, for instance, inside a game item, it would say, in the game, it's an item in a game that specifically can be used a certain way, and that has this sort of proof. When you own a Bored Ape or a Pudgy Penguin or a Mochaverse, then you know that particular NFT, that particular sort of PFP is yours, and it has a certain look and a certain image, and you know that it's certifiably your asset, and nobody can take that away from you, right? That's the kind of proof. Now, what started really with the Bored Apes is that they encapsulated a copyright mechanism within the ownership of each NFT that said, hey, if I own a Bored Ape, that particular image of that Bored Ape, the way that it looks like, actually belongs to the owner and holder of that. And that's actually, if you think about it, a transfer of copyright that is an innovation. It's actually a business innovation that hasn't really existed before. It's kind of like, imagine going to the store and buying a Mickey Mouse t-shirt, and suddenly with that Mickey Mouse t-shirt, you also own, the intellectual property rights with a certain kind of limitation around it, right? Now, this concept, didn't exist really before because it wasn't possible to distribute or to prove it. Because, if I buy this shirt, how do I prove it that actually I own this shirt and I have the right to do so? Well, that's why you need a lawyer. They need to sign a paper. You have a contract. You have to register with the trademark office, right? That's a very expensive process, and it makes it difficult. That's why it's not that easy. But as an NFT, I don't have to do all of that, because actually, if I have it in my wallet, and if someone challenges me and says, "Hey, you're not allowed to do this," wait, hold on, I can prove I own it. You're done, right? So it actually reduces the friction of the whole intellectual property chain down to almost a cost of basically zero, close to zero, right? Which means it opens up the intellectual property rights market in a really big way. So right now, it's very difficult to protect your IP rights in a classical way unless it's worth something, right? So unless it makes lots of money, it doesn't make sense to trademark your music or to copyright your brand or to do some kind of IP protection, because it'll cost you at least tens of thousands, if not hundreds of thousands of dollars to protect it. So if the IP doesn't make you that much money, it's not worth doing. But if it costs you only a few dollars in the form of blockchain technology, like an NFT, to prove it, then you will protect it. Now, the key innovation is that if I'm a small creator, right, or if I'm an early creator, like for instance, I make an artwork, right, and I don't have the money to pay a lawyer to copyright it, but I make it an NFT, which shows that I was the original creator of it. If it happens to become valuable, or if I happen to become famous, or if the work becomes popular, I can certify and prove my origin and therefore claim some kind of rights with that, right? So that's a framework around that. So we shouldn't necessarily look at it only from sort of, the monetization at the top. We should look at it from the perspective that fundamentally, this is how you prove ownership. Now, what does it mean, for instance, for your friend who's looking to make a movie? Well, what he has to do is he has to make, with the sale of the NFT, he has to give with it a certain type of intellectual property attached to it. And so this is where it becomes, part of tokenomics, right? And how do you think about it? So an example might be, right, if he was, like a lot of people look at sort of Web3 business models from a Web2 lens. So they take the Web2 construct and fit it into Web3. Oh, yeah. So, if I make money on the movie, we do distribution of income, sure. But that model, while it is very easier to do on blockchain, already exists. It's not a specifically new innovation, right? Fractionalized ownership. It just tokenizing makes it easier, but it's not a new innovation in its own way, right? So you could do that, but that might become a security, because now I'm actually creating a framework where I'm basically giving, some kind of income because I own this, right? However, what you could do is you could say, well, every NFT that I buy comes with a certain type of copyright attached about the movie. So an example could be, maybe it's a scene of the movie, or a kind of logo, or kind of image. And so that means that if you sell the NFT, you think about a movie, it has 120 to 150 minutes, right? When you divide it up, actually, there's quite a lot of intellectual property in there, from the voice to the music, to the scene, to the memes, to the slogan. I mean, so you could take a movie and you could turn it into 100,000 items of copyright very easily. In fact, I'm pretty sure you could probably turn it into 1 million items of copyright of some form if you wanted to. And each NFT could represent that. Like, think of all the movies you've watched. Some of them have memorable quotes, which means that they become probably the ones that are more valuable than others. So it's just an example of the kind of business innovation you can now do that you couldn't do before, right? And it could be fun to collect, basically the popular scenes in a movie, also this is not that different from, in a way, when you remember when NBA Top Shot first came out, actually they created the scene, a sports moment, right? And that sports moment was more valuable. It's kind of no different than in a movie, right? When you're making a movie, you have moments that are more valuable, right? And maybe you could own a moment that was in Hindi, or a moment that was in Chinese, or a moment that is in English. Like, you can divide it up. I think there's no limit to the creativity you can put forward, right? So I guess I'm just saying that, don't sort of think in construct of, well, this is what works in Web 2, let me translate it to Web 3. Think of the thing that you couldn't do in Web 2 that now Web 3 makes possible. And this is a perfect example of that.
Yeah. I mean, first of all, this is a great tip for all the entrepreneurs who are hearing. Usually any art will have a lot of associated IPs with it. And if somebody can find out a way to tokenize it, make it perpetual in a way, and any people on chain can then exchange, the deeds, the rights. I mean, that's amazing.
Yeah, and I think the other thing that also becomes possible is mashup culture becomes something that you can certify, right? So one of the challenges has been, I've made a piece of IP, and now someone can mash it up. And by me mashing it up from this content, I can actually, and this is the thing about blockchain, authenticity and proof. I can show that I've created this piece of work from this piece. Now, there are two kinds of value, sort of two things that are looked at in terms of value. One obviously is the original content creation, and the other one is who did it come from, right? So, for instance, Picasso can write something, and it's very valuable. Someone can copy the writing of Picasso one-to-one, the perfect copy. You could never tell the difference, but you knew that was not from Picasso. They look exactly the same. They might be just as old. They might be printed on the same paper, but you will pay more for the one that came from Picasso's head. Why? Authenticity. That's all that matters, right? So that means with blockchain, it's the same. I could copy your music, I could copy your art, but if I can show that my art came from this author, this creator, this background, I will pay you more. Music is an interesting example of this because beats and harmony and rhythm actually are very similar, right? Because they actually come, like if you think about it, right? And yet, they've been struggling to figure out how do I create copyright around sort of, like beats and patterns, and it's very difficult, right? Because at the end of the day, harmony has a certain number of like the chords, right? There's only so many chords you can put together, right? So I don't believe in the future it'll matter that the music in and of itself is original, because actually that doesn't really work in that construct. But what matters more is who it's from, right? So you could have the same chord progression, but if it came from, I don't know, Taylor Swift or Justin Bieber or someone like that, and you can then say, hey, I mashed up a piece of work that used a chord progression from Justin Bieber, and that's part of our marketing, it's of course more powerful than someone who's just copying it, for instance, right? And of course, yes, Justin Bieber and Taylor Swift would receive a royalty because they used a piece of their segment which they borrowed from the blockchain. Essentially, they certify it. But of course, they're happy to do so because they receive a royalty, right? And that's kind of what happens with things like Content ID, on YouTube, except you don't see it. It's not public and it's within a closed platform. But it's the same thing. You know how people mash up music and they create cover songs, right? And then at the end of the day, that type of music rights, the original creator gets a royalty for that. But it's a very closed system that doesn't scale particularly well. And basically on blockchain, it becomes open sourced and everyone else can partake in this. So it's just a better way.
Yeah, I mean, if every influencer or every celebrity can have an on-chain, let's say, address, right, and they start giving those autographs, on-chain, and if they can receive a royalty based on any kind of an auction or something back to them, I mean, it can work wonders, right?
Absolutely. Yeah.
So, I mean, from a technology standpoint, I understand we all are very passionate about it, but now I need to go into the mind of Yat Siu, the investor, Yat Siu, the angel investor, okay? Because
sure.
I know a lot, because I know a lot of entrepreneurs who are hearing this, Animoca brand kind of has a sort of reputation right now in the market where they are the Y Combinator, if I may call them, right, of the Web3 world. And
interesting.
That is how, you are the one, man. I mean, look at your progress, look at the investments you have made, and it has been an amazing ecosystem for entrepreneurs, to say the least. And here I would like to know from you that if I'm an entrepreneur, I'm building something in Web3, specifically, let's say, to gaming or to NFT or to metaverse in a way, then what sort of checklist I should be following in order to get into Animoca brands or in order to get into your lenses or your scope?
So a couple of things. So first of all, Animoca now has over 573 portfolio companies. And so it's not just in gaming or metaverse, it's in everything, right? So we're basically very much going into an index. So don't just think, oh, we're doing NFTs and gaming. If you have a cool idea in Web3 that sort of promotes digital property rights, helps grow the ecosystem, brings mass adoption, look us up for sure, right? Now, it's true, we do get thousands and thousands of proposals. And while we would love to fund as many projects as we can, we also have limits, right? In fact, we launched this thing called Hey Annie, which we talked about, which is basically an AI sort of investment bot that helps us filter through it faster, because at the end of the day, there's just too many companies that are trying to build something cool in Web3, and we'd love to be able to sort of look at all of them. And so that's difficult. So how do you gain the attention? And by the way, this is not just true for us; it's true for every investor out there. Obviously, outside of having a good business plan and some cool ideas, Web3 is very much about basically building networks. And one of the early indicators of a network is, what is your community? And so this is where things are a little bit different. If you're a Web2 builder, you're quite product oriented, right? And that's important too. But in Web3, your product and the network effect of the product is tied together. So that's the reason why so many people look at sort of the size of the community, because they're trying to understand sort of, how powerful could that network be? Because when you launch a token, the network effect of that token is so critical, right? So obviously that means you need to be able to build a community, right? And that to me is sort of how you figure out what you're good at or not. For instance, you could be very good at building product, but maybe you're not good at building community. You need a co-founder or a partner that can do that, right? And this is actually not that different from, like some like Y Combinator, I think, has this example, and several sort of accelerators do that too. We don't have this, but many others do. They say they typically like to invest in companies that have co-founders as opposed to one founder, right? Not to say that you couldn't do it as a single founder, but it's to say that, with a co-founder, you can cover all the different bases.
Yeah.
Because it used to be that, maybe if you did one thing very well, that, was enough. But in blockchain, and frankly, even in Web 2, that's not good enough anymore. You have to be good at marketing. You have to be good at sort of, talking to investors. You have to be good at building product. You have to be a good spokesperson. You have to be a good communicator. I mean, it's a lot, okay? And so either we say every person is like a Superman, which is possible. You have a few people like that. But I would say it's more realistic to think that actually I have partnerships with different people that can help me get there. And of course you can evolve, but my point is you need to basically sort of build a base. I mean, Animoca would not be Animoca if it was just me, right? I have a whole team of people and it's growing because of it. And so I think, who your partners are, your co-founders or your core team is very, very important, and be able to sort of represent that in a certain way. Now, for us, and I think this is where we're a little bit different than maybe other investors, what we look for is, does your product have a big impact and purpose in growing digital property rights, and essentially in growing what we believe is a principle sort of in the shared network. And what we mean by that is we believe that Web3, because of its permissionless nature, essentially is kind of like a rising tide lifts all boat sort of structure. And you can see this, right? If Bitcoin goes up in value, all tokens go up. It's great, right? This is not actually true in other sort of Web2 ecosystems, right? If Apple does very well, that's not necessarily good for Facebook. That's not necessarily good for Microsoft, right? But in crypto, when tokens are up, for instance, then actually, generally speaking, other tokens are up too, right? So it has a much more connected sort of effect, which means we believe, for instance, that the kind of founders that understand this can be more successful because they understand how to build more open and permissionless and leverage open networks, versus certain type of founders, more from Web 2, are more comfortable building closed networks, or building networks where they try to monopolize as much access as they can, because obviously it makes sense. But our belief is that the more open it is, the more value can be accrued, because the deeper the networks can become, right? So that means that we're looking for founders who appreciate and understand this. Now, this is something that is easy to talk about, but hard to implement. So you have to really feel it and believe it. And that is somewhat of a belief system, right? Like if you are someone who doesn't believe in open systems, probably crypto is not for you, right? I mean, you could buy some Bitcoin and hedge your investment. I get it. But if you're not it's kind of like, if you're coding and you don't believe in open source, well, then you can't do open source coding. Sure, there's other things you can do, just not open source, right? And crypto is kind of the same thing, right? If you don't believe in open, it's very, very hard to be successful in that, right? So we look for founders who believe open is better than closed, right? And it's one of those things that you can easily say. Of course, when you say to someone, "Oh yeah, we believe in open," sure, we believe in sort of more democratic systems, but do you do it, right? Right? And so that's one of the things that we also look for in terms of your belief and your background and the systems you think. I mean, the success of Bitcoin or Ethereum or even Solana or Mochaverse or Sand, like all these things are only possible because the underlying is based on openness, right? I mean, just think about the biggest tokens in our ecosystem. Which ones of them are actually really closed? And right? Simple, right? Yeah. So you have to believe that, and I would say that's probably one of the most important filters to build successfully in Web3, and certainly what we look for. Beyond the usual stuff, of course. You have to be good at what you do, and ethics and all that kind of stuff. But as a principle, that's a very important one.
Yeah. So, any recent examples or recent investing stories that you've done recently? I mean, any of the recent investments you can share, because that would give people the case study and the mindset.
Yeah, I mean, look, I mean, there's so many, right? But let me point out sort of one that we really I'd like to talk about, just because it's kind of new and so innovative as well. So it's a startup called Pencil Finance, and Pencil Finance basically was building on Edu, which is an education chain powered by Open Campus. And what they did was they basically created an on-chain student loan platform, which we funded with $10 million for on-chain
Wow.
student loans, and that's kind of cool, right?
That's cool.
And in places like India or Philippines or Indonesia, $500 student loans, they pay up to 17 to 30% interest. It's very expensive, but when you put it on chain, you get better yield, which means you can reduce the interest rate. And then of course, what happens is the student has to have a wallet. If he has a wallet, he becomes onboarded to Web3. That means he can have an airdrop. Like you can see how the whole flywheel works, right?
Yeah.
So that's it. And of course, it's about building an open network as well, and it's about essentially sort of bridging and creating access and onboarding. So it checks many boxes, right? The first box is, does it create mass adoption? Yes, because there's millions and millions and millions of students in the world who need better student loans, right? The second, in fact, student loans, and is it a big market? It's a $3 trillion market, student loans.
It is.
Right? So it's a huge market, right? So again, so it's innovative and new and it's different. So obviously that kind of makes sense, right? And then the thing that we look at is, does it have impact? It has huge impact, right? If it's successful, right? So it's something that is an example of, a new direction that most people wouldn't be thinking about, but oh wow, this is kind of interesting, right? So that's an example that we like to give, and this is something we funded just a couple of months ago. And then the other thing, of course, when you look at things like sort of Mochaverse, with Mocha ID, why are we focusing so heavily on digital identity? Which again, and we don't think of digital identity as just a domain name and an ID. We look at it as a reputation system. And so when we tell people we want to build a reputation system, again, people aren't thinking enough about what it means to have a reputation. But actually, we think if you can build a good reputation system, we will create a safer Web3. And so we're investing in this infrastructure precisely because we need to have better trust in blockchain, right? For instance, if I give an airdrop, I don't just have to know that you're human. I have to know that you're a good human, right? Because you could basically just extract, right? And in real life, we want to do business with people that have good reputation. So why wouldn't we want to do this in crypto as well, right? And so what this does is it basically creates a kind of on-chain credit score based on your activity. And then, of course, later on, it can open up for things like basically unsecured credit, which is really the big opportunity. So these are examples where you can think of more lateral business ideas that obviously have impact. Now, of course, we invest still in a lot of gaming. We invest in DeepN. We invest in AI. Because in these segments, you could also have leaders. Like, you have companies that are building really good projects and product that really can onboard lots of users because the product is great. Fine, okay? So of course we'll invest in that too, or they have a good brand, or they have a good IP, right? And we'll support it as well. And recently, what we've done as well, what we also tell projects is, don't just look for startup ideas, as in something that is, like a seed or Series A. We started doing a lot of what we call liquid investing. So basically investing in projects that are already live, that need some support, right? When you take a look at, we are very bullish on gaming mid to long term. And we would argue that some of the best opportunities in gaming is not the new companies, but it's the existing companies, right? Right. And so basically it's not just us buying the token. It's like, okay, we can buy your token and support you and take a bigger position. But also we can help you with the product, or we can bring you customers, if we can do stuff, right? And so there's several projects that we started to engage in this manner as well, because the market's more mature, right? And we have to grow up too and mature ourselves based on the industry. In 2018 and to 2018 up until 2021, when we first started doing all the gaming and metaverse and NFT stuff, and very much, I would say, pioneered the direction of that market. The reason why we were investing in so many startups is because there was nobody doing it, right? Right? I mean, it was a category that didn't exist, so we had to fund every small startup. Today, there's so many, right? So and many of them are live already, and some of them have very good product, but the token hasn't done well because it was a bear market, was bad tokenomics, you can fix that, right? And in many cases, these projects have a lower market cap than when they raised the money at. So again,
Right.
And they're profitable as a business, but they maybe not have a good tokenomics. So we can help with that. So I think we're in this phase where, it's not only projects that are new, it's also projects that are existing. And I think, so again, if you have a project that needs help but is already in the market, you can come talk to us as well.
And what is the best way to reach out Animoca team? Yeah.
Well, so I think so the best thing is, you send emails and applications. That's obviously one way. We have the website, right? But I would say the other thing to do is personal connection always is helpful at the end of the day, right? Which means when we have an event, show up. If you have a reason to come to Hong Kong, make an appointment. We have lots of events happening in our office. Meet people in person. You can't really sort of do away with the human touch, right? We have people all over the world as well. Sort of try to connect with them, and I would say also maybe to make it efficient. When they send a pitch or when they try to talk to us, obviously we try to spend time with everyone as much as we can. But as you may recognize, things are busy and it's very hard. We don't happen to have, the first pitch cannot be half an hour explaining everything from top to bottom with every detail and your P&L. It has to be quite punchy. So you have to practice that. So if you can create if you can explain your business and your tagline basically in 2 or 3 minutes, I think you have a better chance, because then you can remember them in a certain type of way, right? So that is, you could say this is kind of a marketing trick, but it's kind of essential, right? Otherwise, it's really, really hard to gain attention. And remember, what is Web3? It's about attention, right? It's about community. So if you want to show that you're good at creating attention, you have to show the VC, the investor, that you can gain our attention as well, right? Yeah.
That can be the highlight of your pitch deck. Send the highlight of your pitch deck, not the 3-hour pitch deck.
Yes, exactly. Yes.
All right. So moving on, you just talked a bit about the markets. You talked about the global narrative around Web3, how Animoca is particularly trying to lead the way, trying to pave the way forward for these entrepreneurs. And you have been for a long time being based out of Hong Kong. So I am really curious to know that where else Animoca is now moving ahead, where else you're going to have your next offices, so that more and more people can reach out to you. So what are the other regions?
So we're in we're in many countries already today. We're in places like in Europe. We're obviously in Dubai. We're setting something up in Abu Dhabi. Also, we're in Riyadh, right, in Saudi. Of course, Hong Kong is headquartered, but we're in Australia and Southeast Asia, Japan, Korea. So we're all over the world in those places. And of course, the market that we're doing a lot more now is the US. Right? And so, we're looking at New York very actively. We have, I guess, through Sandbox, a presence in Los Angeles. The point is that the US is going to be, probably the most important crypto market, in the near to midterm, if not for the longer term. So obviously we have to be there as well. Right. So we're a global business. So you can reach out to us everywhere in these places. In terms of segments, the biggest crypto market is still Asia, obviously, and will be. There's a few markets that we have made investments in, but we haven't set up an office because it's a market we're still trying to learn. India is a good example of that, right? And the reason why we're still trying to study India is not because India isn't important. It's very important. In fact, it's in terms of adoption, it's one of the biggest ones in terms of crypto. It's just because we know that the regulatory framework in India is not very clear, right? So why are we entering the US? Because the regulatory framework is getting very clear, right? And we can see the direction, so it makes sense, right? And then we're making investments and we're going into the space and doing stuff. Whereas in India, it's not that clear yet. Like, we don't know sort of how we should operate in a market where the regulatory clarity doesn't exist. Because it strikes me that India has a little bit of a love-hate relationship with crypto. Like, they want to tax it and they want to make money from it, but they're not really okay with people doing it in some places, right? So by the way, this is not uncommon, right? And eventually they'll get there because the younger generations all love crypto. So eventually they'll have to do it. Like, this is a typical pattern, but when is the right time, right? It's hard for us to know, right? And the same goes for places like in Africa, for instance, right? Adoption in Africa is very rapid. Regulation, not so certain, right? And so if you so that means it's easier for us to make investments in those markets, right? So that we're there. But setting up our own office is something that we need to do when we think there's more clarity for us, because we're not a smaller startup. Like we have to sort of abide by whatever rules and structures that are out there, right? So for instance, in India, we've made some investments in companies that, for instance, in the gaming side, right, like with Encore, right, or with GoKey. Like we've done a number of nice investments that we know will have good impact as a way to enter that market first, and then develop from there and take it from those places, right? I mean, I would say when it comes to footprint of investments, I would say we're in every country or every continent except Antarctica.
Let's leave Antarctica to penguins.
Yes, exactly. Yeah. Although we are investors in Pengu and in Igloo, so at least we at least we have an adjacent relationship with Antarctica.
Yeah. So I mean, of course, I mean, see, we love talking to you. I personally met you a few times, and I have heard this from so many people that it's so easy to talk to you that even somebody from Web2 who doesn't know anything about Web3 can talk to you. So that's really, something that people look forward to in Web3 people more and more, because we tend to be sound geeky, I can say, right? Web3 is something about only tech people. But I think people forget that it's more about community. It's more about people, as you can imagine.
Yes.
It's not just about technology part of it. So you are a perfect example of,
No, thank you. But I would also say that at the end of the day, it doesn't matter if you're Web2 or Web3, we're still all humans, right?
Yeah.
And at the end of the day, the foundation of all human connection is basically our relationships and how we empathize and how we connect with each other, the tribes we create, the communities that we build. And while we may say that we're building them slightly different between Web2, Web3, the outcome is the same. At the end of the day, how I feel about something or how I relate to something is actually the same, right? Like it's like some people, because I'm a little older, so I was there at an analog age when we used to meet people not online, right? In fact, I was when I started meeting people virtually in the 90s, or actually late 80s, it was weird, like to meet someone that you had made first contact digitally, right? Mm-hmm. And then through a bulletin board, and then eventually the internet, and then you would meet up maybe even 1 year later, and for the people on my generation when they were younger, that was weird. Like you don't meet people that you meet online first. It's like it's even stranger than writing a letter, right? At the time, right? And now it's completely normal. But what I can say is that the relationships that you build with someone that is virtual versus someone physical, the emotional connection is exactly the same, right? The type of relationship you have with them might maybe have different tools, but the way you feel about them are kind of the same. So that doesn't change, right? And I think maybe the lens here is, we didn't come from crypto in the beginning. Mm-hmm. Like we entered the space because of NFTs. We're not Bitcoin OGs, right? So you could say that, Animoca is more of a crypto immigrant, right, mm-hmm. than a crypto native in the classic sense, right? Yeah. So the good and the good about this, I would say, is that we have basically straddled both worlds. So we saw what this world was like, and then we entered and saw the light of the crypto world, the Web3 world, and I can help sort of communicate that. Whereas I would say, it's kind of like when you see younger generations that are on TikTok, they have a totally different language. And of course, they still see the same human connections, but older people are like, I don't know what you're talking about, right? So it's actually not that different, right? And so it sometimes needs people who are a little bit older who remember what it's like to bridge that. And I would say, inadvertently, we ended up sort of being in this role just because of circumstance, not because we designed it that way. It was just more like a happenstance and good fortune.
So Yat, I know there are so many events happening in crypto right now. Any recent events coming up where you will be there and people can meet you and greet you?
Yeah, I mean, we're a fair bit in the US. There's we do a lot more sort of institutional events So, there's a Goldman Sachs event that's happening obviously in June. So, we're going to be there. But also we have many people from the Animoca team elsewhere, right? Right now, we've got people in Lisbon. I think Robbie is there and Seb from Sandbox is there, for instance, right? And then we have our guys in our Japanese office that are sort of running in some Japanese events. So it's not just about myself. Like I can't be everywhere, right? So people are sort of distributed around the world. And I would say, we have representatives over at NFT NYC that's coming up, also in permissionless, right? We have some people also at ETCC. In fact, Mochaverse is having a hacker house at ETCC, right, in Cannes, right? So I would say that you'll find us in all these places. It's not that hard, and of course the other thing you can also do is, if you're not sure, one thing is that if you ping us on X, and typically speaking, or take a look at our Instagram page, and you'll find where we will be as well. But I would also say that if you sort of go to the major events like Token 2049 or those type of ones, we're always there, and we typically have what we call a portfolio day. The portfolio day is where our portfolios come together, and it's basically a half-day to one-day event where Animoca's sort of senior management and the entire team is there, and quite a few people show up. But it's the best way to connect with us, in those places, because chances are that you will probably be at the event anyway. And so if you want to pop by at our event, that's where you can meet, me and others to potentially discuss opportunities. And it's usually a very good gathering.
Great. So now it is time for our 60-second rapid fire round. Okay.
Sure. Yeah.
So this is just a 60-second round, and we will be asking a few questions. Let's see how many we can cover, okay?
Sure, go ahead.
Bitcoin or Ethereum?
Well, geez. I mean, so first of all, I would say both.
Hands up, this is going to be difficult.
Yeah, no, of course. But look, I mean, this sounds like a cop-out answer, but I think the two of them, you can't compare them. So you can't really compare them because I think Bitcoin and Ethereum are two entirely different constructs, right? And by the way, I would argue that if Ethereum didn't exist, Bitcoin would not be so valuable. So they're sort of two sides of the same coin in a way. So I'm afraid I have to say, it's a draw.
It's a draw. It's okay. Okay. One crypto book that you will advise everyone to read.
Crypto book.
I mean,
wow.
Book, and any book, not crypto. Any book.
So
what's your all-time favorite? Yeah. What's your all-time favorite?
No, because I don't think you should. I don't think you should read a crypto book. I think a good book that might explain the ideas of what it is, maybe Hayek's Road to Serfdom, right? I think that's a good one, because you want to I think you want to understand some of the principles of sort of why you're here. So I would say the Road to Serfdom is a good example of a kind of book, because it sort of explains that, or from Mises as well. It's a bit intellectual, but if you had to read a book about that, I think it's more important to start with the fundamentals than go straight into crypto. Like going straight into crypto is a little bit like going into technology in a way, right? You understand blockchain, you understand the ledger, but if you don't understand the principles of economic freedom, right, then it doesn't make sense. And by the way, I think that's the problem a lot of people who don't understand crypto and Web3 have. It's not that they don't understand that they should have some value. It's that they don't understand what money is, and they don't understand economics, and they don't understand that. And so therefore it's hard for them to appreciate why Bitcoin is important or why tokens is important. So I would argue you should start with something like that.
Hong Kong or Dubai?
Oh, that's so unfair. So unfair. Well, okay. So I would say they're both great, but I would say I prefer Hong Kong. And the reason why is because we have green mountains. So
I've been there. It's beautiful. It's beautiful.
Yes. So I mean, I love Dubai too. But I would say that Hong Kong is, and it's very hot right now in Hong Kong too. But I love hiking, and so there's just no hiking in Dubai. I totally expect, by the way, that eventually Dubai will build a place where you can hike inside, right? I mean, I can totally imagine that, a place like Dubai would do that. But right now, if you want to hike in nature, between Hong Kong and Dubai, Hong Kong is the only thing it's impossible there. So I would say, on account of that, Hong Kong.
One crypto startup you regret not investing?
There's so many, but I mean, it's hard to, I mean, I don't know, like regret not investing. I mean, I would say we're not the type of investor that doesn't invest. So that doesn't invest when we like something, because we invest later. So, for instance, we didn't invest in Solana very early. We invested in Solana later, right? But we didn't invest in Solana right in the earliest of days, which perhaps, if you think about it, we should have done, right? So that means we didn't get the same return as someone else, but we now believe in it as well, and so we invested later, right? So I would say we don't have, because we're not just investors, we want to build ecosystems. We don't have the view that, we missed out, so we won't do it now. Like it's more like, okay, it turns out it's real, so now we can invest, right? We don't have a mandate that we only invest in early stage, for instance. So we're not restricted that way, right? So yeah, maybe I could say that maybe, maybe the easiest example is, I wish I bought more Bitcoin early, right? But I still have Bitcoin and I'm not complaining. So
yeah, last question for you. Is Yat Siu a late night person or an early morning person?
Oh, I'm kind of both.
Okay.
Because I do go to bed fairly late sometimes. It's also because I'm in all these different time zones. And then I like waking up early. I typically can't sleep more than 4 hours. And so no, I don't recommend it. It's just something that I think as you get older, actually, somehow you sleep less. At least that's my experience. But I get a lot of things done. And for me, waking up early is a routine. So it's like, basically, working out, sort of do my morning routine, and then you get ready for the day, right? But I would say, broadly speaking, I mean, maybe I'm more of a morning person in terms of the activity. But of course, that makes the assumption that I go to bed early, and that's not true either. So
yeah. So Yat, thanks a lot. It was wonderful talking with you. I personally enjoyed a lot, and I'm sure that the information, the knowledge that you've shared today on this podcast will help a lot of people. Will help a lot of people to actually understand what Animoca is, what their vision is, and also how they can better reach out to you in case if they have a good opportunity or a good idea. So yeah,
of course,
thanks a lot. You have been. I mean, I have personally met you a lot of time, and for some reason, as I said earlier, it's very easy to talk to you. I don't know why. So I hope you all can be like you. Thanks a lot. Yeah.
Thank you so much.